This is Lester Martin. I'm going to move into another section of the retirement deck, and this is going to be related to health insurance details. One of the key items here is the health insurance options, and this is rather complex because the situation is rather complex. And keep in mind that in general, the option that you have will be in many cases, especially the Medicare part, will be for each individual person, whereas the high deductible insurance will be perhaps for the employee or retiree and their dependent as a group. In the left column, does the employee qualify for retirement health insurance, such as do they meet the rule of 75? Is that employee qualified? Depends on when you started, what part of the company you're in. At AT&T, you may be qualified or not, and if the employee dies, then the dependents, the spouse and other dependents, fall under a different category, and they're no longer covered by insurance by AT&T. The next thing, it depends on the insuree's age. Now, this is not the age of the employee or the retiree or the dependent, but in each individual one. So you may very well, depending on the age, it may be that the retiree is above or below 65, the spouse is above or below 65. If in fact the employee is qualified, the insuree is below 65, and it's an active employee, then it's not a retiree, and of course they'll get the active health insurance, which is a high deductible in most cases from United Healthcare. And these numbers are a little old. There are other numbers for 2016. Whereas instead of if the person is not an active employee, but rather is a retired from AT&T, then if they're below 65, then they're still going to get the active health insurance, high deductible, consumer, bronze, silver, or gold. And the cost of it will be actually rather much the same for the retiree, but it will be substantially higher for a spouse or dependent in the case of the retirement situation versus the active employee. And then if the insuree is below 65 and it's a dependent of the employee or retiree, then they will still get the active health insurance in some form. Now, going down to the next row, if the employee is qualified but the insuree is 65 or older, then if it's an active employee, even though they're 65 or older, they're still going to have the high deductible United Healthcare insurance. Now, if the person, AT&T person, is retired from AT&T and is 65 and older, then they're going to be depending entirely on Medicare insurance, and this is where things get complicated. They will need to get that Medicare insurance, or at least part of it, through Aon in order to be able to get the HRA. AT&T does pay an HRA, which is a health reimbursement account of $2,700 for a retiree per year, and that can be used for Medicare Part A or B or D, or a supplement, which is the same as a Medigap, or for an Advantage. So you'd pay for various parts of this with the HRA. It may pay for all of it. It may pay for part of it. Now, the dependents, once again, would also have a similar situation. However, the dependent, unless they're also an AT&T employee, the dependent simply results in the retiree, the AT&T retiree, getting an HRA of an additional $1,500 per year. Now, it means that depending on whether one or both, or one or the other or both, that may result in $2,700 or $1,500 or a total of $4,200 per year, depending on who is over 65, whether it be the retiree or the dependent or both. Moving on down, if the employee is not qualified, that is, doesn't meet the rule of 75 or joined AT&T after the retirement insurance stopped being a benefit, then if they're below 65, then they're not an active employee. That is, well, if it is an active employee, they will be qualified while they're an active employee, and so they'll get the high deductible insurance. If they are retired from AT&T and they're not qualified, then they're simply not going to get anything from AT&T for their insurance, and they're going to have to either go to get COBRA, which is rather expensive, or go to Obamacare. And same thing would be true for the dependent. Each one separately would have to go with COBRA or go to Obamacare. If they're 65, if the insuree is 65 or older, then if they're retired from AT&T, then they'll need to get Medicare, which would be Parts B, D, Medigap, or an Advantage, which is the same as you would do if you didn't work for AT&T, and there is no reimbursement from AT&T or from Aon for that. And likewise for the dependent, they would get whatever it is they normally would get from Medicare, but there's no reimbursement from AT&T for the to pay for that. An AT&T employee has certain benefits that they get from Hewitt. Those are for qualified. This is supposed to be qualified, not quailed, employees and retirees. For an employee, they include things like health insurance, life insurance, etc., and they are obtained through Hewitt. Whereas for retirees, it includes only health insurance for the for retirees which are below 65, or a spouse that's below 65. So they will get that through Hewitt, through benefits, if they're below 65 and if they're qualified as per the previous chart. And then there's basic life insurance that will be listed by this, and it's paid by AT&T. And then there's Care Plus that's approximately $1 per month per employee or spouse, and these are renewed each year. The basic life insurance is paid by AT&T, so there's no charge there, but it drops down to $50,000. Any supplemental life insurance you may have to then shift and get somewhere else. And this free insurance drops each year. The information on this seems to vary quite a bit, so it's not clear whether it drops by 10%, 10,000 each year, and it levels off at 0, or it levels off at 15,000. There is confusing information about that. Care Plus is a benefit that's available for $1 or $2 per employee or retiree. And they talk about it as though it's experimental treatment, but in reality, I believe that it does pay for, in certain cases, pay for digital mammograms where other insurance and even Medicare pay only for normal 2D scans, and that it may pay up to $1,000 on some basis for hearing aids. So the Care Plus is a valuable thing to have. Aon. So what does it do for you? Here are the steps. First, it's an agent selected by AT&T to help retirees obtain medical insurance. If you qualify, AT&T, Aon obtains from AT&T benefits, that the information that an employee plans to retire, the date of that retirement, and is qualified to obtain retiree insurance. This occurs a short time, maybe a month or a little more before retirement, making it difficult to finish all the other steps in time because it doesn't happen significantly early. Aon will then arrange for an HRA to be funded $2,700-$1,500, as we talked about earlier. Just a note: if you get HRA, you must order either Medicare Part C, Medigap, or drugs through Aon. You can get the other parts through another agent, but if you don't, you have to order at least one of those through Aon in order to get any of the HRA information. The $2,700 for the retiree is perhaps enough for a supplement G or N plus premiums for Medicare D, like SilverScript, but it's not going to pay, for most people, will not pay all of the D copays, nor is it enough for paying all of the Medicare Part B. Aon then provides general advice on what's available as far as Medicare, ABCD, Medigap, dental, vision. Even though it's not providing all of those, it provides general advice on that. Aon will not order Medicare A or B. The employee must order these from socialsecurity.gov or perhaps medicare.gov before Aon can move forward with any other medical insurance, any other Medicare insurance. It's critical to sign up for Medicare at 65. While many people do not want to get Social Security until 66, this can be confusing because you need to go ahead and get on socialsecurity.gov or medicare.gov at 65 to sign up for Medicare A and B if in fact you're retired. If you're an employee, you do not have to get online at that point and sign up for them. Medicare A is free for almost everybody if they have any lifetime earned income. Medicare B is a minimum of about $105 a person with a gross income of less than $170,000 for a couple. This goes up most years. The 105 will go up to 110 or 150. Many people that do not exceed this 170,000 for a couple, the first may not exceed it for the first few years, may very well start exceeding it whenever they have to pay, when they have to do minimum required minimum distributions after 70 and a half, when you have to start withdrawing 4 or 5% of your pre-tax savings plan, IRAs, etc. Whether you need it or not, whether you needed to spend it or not, you have to withdraw it and you have to pay tax on it at that point. Most people order supplement Medigap Plus D, as far as I'm aware. Others order Advantage. An Advantage plan is a Medicare Part C. You do one or the other, and the Advantage may or may not include D. If it doesn't include it, you need to get the D separately. Supposedly, there is a cost of a specific Medigap from Aon should cost the same as from another agent. This is supposedly the case by law. If you want to go to another agent, if they offer a plan like Medigap G that's not available from Aon, that's a reason why you might choose to go to another agent instead of Aon. If you feel that Medicare Advantage is best for you, you want to keep the HRA money, you must buy that Advantage plan from Aon. Buying it from another agent means you forfeit the HRA deposit entirely. And then Aon will provide information for the employee to order dental or vision, but the employee must make the calls and do the orders. Details about the HRA: it's a health reimbursement account. AT&T provides that. I've mentioned how much it costs. It's provided via Aon for qualified retirees. For over 65, the HRA is $2,700 per year, or it's prorated depending on when in the year you start. For spouses, it's $1,500, or it's prorated. If they have other insurance they might want to take from a spouse instead of Medicare insurance, they can do that, in which case then they can get an HRA of $300 per year to help cover dental only. To get the HRA, the retiree must order the Medigap supplement or Advantage or Part D directly through Aon. For the spouse to get HRA, the retiree must qualify for their own HRA, or if the retiree is younger than 65, must obtain retiree health insurance from AT&T Benefits. If the retiree doesn't get either their own Medicare or their own retiree health insurance from AT&T Benefits, then the spouse will not qualify for any HRA. While the HRA is not taxable, it is used to net out tax expenses, and thus anything reimbursed using an HRA cannot be itemized as a deduction for federal or state taxes. The same is true for money from an HSA, the money paid as pre-tax, and also for money paid as pre-tax through Flex. Thus, that is true, and the medical expenses must exceed, after you've netted it out, the expenses must exceed 7% for federal, or about 2 or 2.5% for New Jersey, and therefore medical expenses must be relatively large to reduce your income taxes. In terms of the options for Medicare, there are two options, two directions you can go. On the left, you can get Part A, Part B, get a Part D, and then get a supplement. So all of these, ignore the concierge for now. You'd get Part A, Part B, Part D, and a Medicare supplement. As an alternative, you can get a Part C, which is an Advantage plan, which may or may not already include the Part D. And if it does not include the Part D, then you may need to purchase Part D separate from the Advantage. So you either go this route or this route. It is very important to realize that if you're going to ever expect to have the left route, that is the original Medicare and supplement, then you have to get that initially, the first chance you have, and keep it, because you cannot assume that you can move from an Advantage plan over to the original Medicare. To try to do that, you have to apply to get it, and if your health is an issue, then you're not going to be able to qualify, and they will not allow you to move over to the supplement. So people, at first glance, it appears that an Advantage plan is cheaper for some very healthy people, but you're not able to move over here. And just as an example, if you're in an Advantage plan, like it says, it is like an HMO or a PPO, and it's going to depend very much on, you're going to be limited to a network of doctors and hospitals. You're not going to be able to move, say if you're on the other side of the country and you have issues, then you have problems there. And so for that reason, often it's recommended that you start with this and stay with this. This you'll find in almost every document that comes from any vendor that sells a Medigap or a supplement, and this talks about what each of these pay. So if you have a plan B or F or G or N, then this tells you how much it pays. First of all, Medicare Part A and B pay their parts perhaps up to 80%, and not all of it. And then these pay for the deductibles, the co-pays, the co-insurance, and so these have different prices. F, which pays 100% of almost everything, has a higher cost. G costs somewhat less and only has one item right here that's not paid, and G may actually be a better deal for many people, maybe for everybody. N also is cheaper, and there are just some things that it does not pay. And so if you're able to get G or N, you may consider doing those instead of getting an F. One thing to be very aware of, and that is notice that nothing pays 100% of foreign travel, medical, and in fact it's only emergency, and it only pays after a deductible of $350 per event, and only pays 80%, and it only pays for a maximum of $50,000 total for a lifetime. So that previous chart looks like everything is covered if you had F, for instance, but medical, what is and what's not covered from Medicare. International travel is not covered at much. I mentioned that. Long-term care is not covered, so you need that kind of insurance. The $2 insurance may cover, that is the one we talked about earlier, may help on mammograms and hearing aids that A and B and the supplement do not pay. Some doctors do not accept Medicare, but it's a very large network. So you're not limited on part of the country or whatever. Not every procedure is covered by Medicare. Be sure and look through the Medicare document to find out what is. However, if it's not covered by Medicare, it's not going to be covered by the supplement. Ordinary Medicare, A and B, and therefore the supplement, do not cover major elements of almost anything on dental. It doesn't cover glasses and prescription for glasses, and it doesn't cover most of, if any, of hearing aids. Now, you may need to find out more in certain cases. Vision, I went to an eye doctor. It covered the health-related, medical-related parts of it. The only charge was a $35 charge for me for the vision prescription. And I didn't get glasses, and it would not have paid, the Medicare would not have paid for that. There are other restrictions on what A and B cover. There must generally be 2 nights in the hospital, and it must not be just for observation. This is a very expensive risk. Be very careful they don't just put you in there for observation, because you could end up paying thousands of dollars. And then Medicare is not the primary insurance for injury caused by a car accident where there's PIP insurance. It's that car insurance that pays for it, not the Medicare. This is just showing how the flow of money goes with respect to Medicare insurance. So for certain people, this is very common. Money, your monthly money, if you in fact have Social Security. Some people have Medicare and have not started Social Security, but if there is money from Social Security, then part of that may very likely go into part to pay the premiums for Part B and the premiums for Part D. That's what we have here. And the rest of the Social Security then goes into your bank account. Likewise, early in the process, that is the first month or two, Social Security may not start picking up. So you may have to have a bank transfer, debit, or a check for the first month or two to make sure that these premiums are paid. As drug bills occur, you will pay for part of it. The information for the rest of it will flow as a notification to Part D. From there, they will flow. It will flow from there to the HRA account, and then you will get reimbursed if you have it set up that way. If you have an automatic reimbursement, and so you'll get what you paid whenever you paid the bill at the pharmacy. Medical bills, typically you do not pay anything at the doctor. Notice that the entire bill will go to Medicare supplement, to Medicare and to the supplement. They will then pay the doctor the parts. Notice will go to the HRA, and a second notice will go to you telling you that you're getting ready to get a check. You get a check, which you then deposit, or you get a notice that an automatic distribution is being made, automatic reimbursement, and that's going into your bank account. So this is that flow process. This is just giving you an idea how much some employee insurance is. I'm not going to go into the details because these are not the retiree costs. Likewise for the deductible and the maximum out of pocket. So I'm going to stop at this point.